Today we see an excellent recovery movement which could start a bottom signal on both the SPY and the QQQ, suggesting that yes, many stocks, including those on our radar, could perform very well next. Now you could argue, oh, but we are close to the all-time high on the SPY. Will it have the strength to continue the uptrend? Well, that's a great question, so let's see what to expect next. You are watching the Finance Hydra channel, where we study the market from a technical analysis perspective every single day. All the ideas described in this video, all the strategies are all based on technical evidence. No emotions, no guesswork, no stress. My name is Nathan. Welcome to another daily analysis. Now, as we can see here, SPY is making a very nice reaction after finding a support level above the 594, the previous bottom level from the previous Monday from Deep 6 day. Alright, so we are again retesting this support level. We failed in losing it because in the end, although we briefly violated the 594 yesterday, we could not close below it on the daily chart. So we found a crystal clear support level above the 594 and now we are bouncing nicely. In fact, we are breaking yesterday's high and we are breaking the 21-day EMA as well, the exponential moving average on the daily chart, meaning that we are again in bullish territory, making a bottom signal above a crystal clear support level after making a bullish reaction. That's a quite interesting reaction, and it does suggest that yes, SPY is supposed to maintain its bullish bias medium-term wise, and in this scenario our next technical resistance level is the 609 area, which is around the all-time high area over here. So in the absence of a crystal clear bearish reaction suggesting a pullback or a bearish reversal, SPY is supposed to maintain its bullish bias medium-term wise. Alright, now Nathan, what could possibly reject this bullish case of yours? What could possibly reject this reading suggesting that SPY is going to actually turn bearish again? Again? The 594. That's our most important support level. If SPY loses it and closes below the 594 on the daily chart, then alright, possibly we are going to see another correction ahead, a sharper pullback, possibly to close this gap over here around 585, or in the worst case scenario, we could retest the 576 again, and then we'll see. But this scenario would be quite problematic because although it feels like SPY is inside a medium-term congestion over here for the past few months, since November last year, right? On the weekly chart, the necessity of a meaningful bullish reaction as soon as possible is clearer because we see a very important support area on the SPY made by the 21 weekly moving average and of course this purple trend line connecting the previous bottom levels since October 2023. If the SPY misses these two support levels on the weekly chart, that would be quite suggestive that we are losing momentum long-term wise, and that this makes the bullish sentiment weaker and possibly could trigger a sharper correction on the weekly chart. Alright, if this happens, the 576 is not going to be our target. Instead, we could look out for the 563 down here. That's going to be our next meaningful technical target if we see the SPY losing this double support level on the weekly chart. Of course, this bearish scenario has a lot of ifs, okay, because so far we only see today, we only see another bullish candle. Okay, in fact, we closed the last open gap over here. All right, making this gap just a normal, a common gap. So we are not ready for a bearish reaction yet. There is no technical evidence suggesting a bearish reversal. So far, so good. We are still maintaining the uptrend, and this is it. Remember, my dear friends, we can't predict the future. Real trading, real professionals, they trade reactively, all right? We don't try to predict the future. Those who try to predict the future, they are usually amateur traders. They don't know what they are doing. They don't work with a clear strategy. Real trading is reactive. It is not predictive. So as far as we know, with the information we have right here, right now, there is no technical evidence suggesting a bearish reaction. If we lose the 594, then all right. Then we can think about a sharper correction ahead. Then the situation will get more dangerous, but so far, we are still above our medium-term support levels made by the 21-day EMA, made by the 594, okay? Now, regarding the QQQ, the support level on the QQQ is a little bit more clear to me, because when we analyze the 1-hour chart over here, we see the 511 as our major support level, right? The QQQ found a support level a few times over here in this area, and it did again today. Now we are bouncing. So just like our SPY analysis, here the most important support level is 511. Only if the QQQ loses the 511 and closes below it on the daily chart, we could see a sharper correction ahead. In this scenario, the $500 is going to be our next meaningful support area, but we could seek for lower support levels like this support line of this ascending channel on the QQQ. And remember, just like for the SPY, we are still bullish on the QQQ. We are still above the 21 weekly moving average. We are still above the $500. We are still above the support line of this ascending channel. We are still inside an ascending channel. And as the name suggests, we are ascending. All right, therefore, we are still in a medium and a long-term bullish bias. Maybe medium-term wise, you could say that we are more like sideways, all right? And I'm not gonna disagree, but overall speaking, we are still trying to maintain a bullish bias over here. But remember, 511, that's our most important support level. If we lose the 511, then we are going to reject the bullish case I'm just describing to you guys over here, all right? So again, since we can't predict the future, we need to always work strategically. So this is why I always tell you guys, always know where your stop loss, where your target are going to be before you place the trade. Okay, you must have these aspects in mind, these key points in mind, because if you don't have a trading plan, then you are planning to fail, as I like to say in this channel. Now, how all of these movements are going to affect our stocks? Because Nvidia right now is making a very nice bullish reaction above the support level we have been describing here in this channel for a few weeks now. Yes, that's fantastic. A bullish signal above a support level. What's the problem over here? The problem is that Nvidia is still not bullish. Okay, we are still below, first, the 21-day EMA. Secondly, we are below the 130s, which was the previous resistance level, previous support level multiple times. Another example of how the principle of polarity in technical analysis works, by the way. So this key point, along with the 21-day EMA, they together are supposed to be our next technical resistance area. All right, so even if we see Nvidia making a bottom signal, it could bounce to this resistance level, and again, it could fail in breaking it. Now, Nvidia, as long as Nvidia maintains its price above these two support levels, it is not going to turn bullish yet. I'm sorry to tell you guys, I know you guys love Nvidia, so again, guys, please do not kill the messenger over here, all right? I'm just describing, doing an honest analysis on how Nvidia is performing. And remember that I also have Nvidia's shares over here. I invest in Nvidia since 2020. So guys, I have been through this roller coaster a few times, and right now we are trying to react around the support level. For swing trading purposes, does Nvidia make sense right now? Yes, it does make sense, but again, bear in mind, we are still in bearish territory, and for swing trading for a long position, all right, and that's what I'm saying. So bear in mind that a long position must be short-lived, because we are still below important resistance levels. We are still below, we are still in bearish territory, and it is going to report earnings in 22 days. And again, we never know how any stock will perform after earnings. So for swing trading purposes, I never advise you guys to hold any stocks during earnings, okay, when it is going to report earnings. But for a long-term position for investing, okay, you are totally fine in holding Nvidia, in my humble opinion, of course. Now, this is my humble opinion, all right? But we do see technical evidence suggesting that Nvidia could bounce from here, just like on the SPY, just like on the QQQ. We see a nice reaction above a nice support level. But it is still in bearish territory, so be careful with this resistance level near the 130s. Okay, this key point is going to be the most important inflection point for Nvidia. Nathan, what if Nvidia breaks the 130s? Fantastic, then fantastic. Probably it is going to seek to close our next gap at 141 or maybe even the all-time high. Nathan, what if we lose this support area, this yellow area of yours? In this case, our next technical support level will be the 100s. All right, a round number, a psychological support level, and it was a technical support level as well in September last year. Therefore, $100 is going to be our next meaningful support level. It all depends on how Nvidia is going to react from here. So far, so good. We see bullish evidence. Let's hope it is going to continue its bullish sentiment. Now, regarding Tesla, guys, regarding Tesla, this one is trying to react above a support level. Yesterday, it made a hammer candlestick pattern, and according to Thomas Bukowski's studies, a hammer does reverse the trend 60% of the time, if I recall correctly, but it failed in triggering this hammer yet, alright? Meaning, we gotta close above this hammer's high in order to actually officialize a bottom signal above our 373 support level. Okay, only by doing so, Tesla will have a chance of recovering, of seeking higher levels, maybe the 426 again. There is a secondary resistance level over here made by the 21-day EMA, made by the 406, which did work as a resistance level last week over here, right? We did fail in breaking through this double resistance level, so watch out the 406 area along with the 21-day EMA. So it feels like Tesla is still inside a congestion. There is nothing wrong with Tesla, but right now, you gotta bear in mind that if we lose the $373 again, we could seek lower levels, maybe the 358s again, or even lower levels on the weekly chart. The situation is still under control, all right? We are still in bullish territory, unlike the daily chart, which feels like we are more sideways over here inside a congestion between the 426, between the 373. On the weekly chart, we are maintaining the bullish bias in spite of the signs of weakness on the daily chart. So if Tesla is about to react, now would be the perfect time to do so. But guys, again, remember, you must always trade strategically in this context. And guys, we always work with honesty and transparency, so I have to tell you that if you want to become a member of our educational project, the 5% project, you are invited. Our members have access to exclusive analysis and the trading signals and strategies based on my personal methodology, which I have been using for many years now, and which has given our members excellent results so far. Yes, you will receive swing trading signals in Tesla, Nvidia, SPY, QQQ, and many other stocks that I have on my personal radar, where I teach you where to buy. I explain to you why you should be buying, where the stop loss is, where the target is going to be, in order for you to sell for a profit, all in detail. You can test our service for free. By the way, it is totally free, as we are confident that we are able to deliver valuable content, valuable information to you while you are in the trial period. Then you decide whether you want to stay with us for real or not. No obligations, no strings attached. All right, so just take a look at our website. The link is in this video's description. Deal? Now, I do believe that it is plausible to trade Tesla over here in this context, but we just gotta be careful, because the risk reward ratio is quite maybe too aggressive over here, but I don't know, maybe I will share a trading strategy with the members of the 5% project, but I'm still not so sure. And when we take a look at other stocks, oh, and guys, by the way, I totally forgot. I didn't record our video yesterday. Okay, I'm so sorry. It was totally my fault. I'm gonna be honest with you guys. I simply couldn't record because it is a funny story, by the way, because I went to the gym and I did a lot of exercise. I exerted myself and I felt like a crap bag after gym, and I simply couldn't record our video. You know, do you ever felt so tired? Do you ever feel so tired that you couldn't even sleep? That's how I was feeling yesterday. So totally my fault. It is not going to happen again. I'm not gonna do that again. So sorry, but yeah, I really thought I was going to die. All right, honestly, I thought I was going to die, but now I'm good as new. So let's continue our analysis. Speaking of that things, AMD is clearly in bearish territory. It is not reacting. Now you may say, but Nathan, we are reacting right now today. I mean, today we are going up almost 4%. Yes, we are going up almost 4%, but guys, see the 21-day EMA acting as a very reliable resistance level. As far as I know, we could just bounce to this area again and find a top level again and continue to drop, because that's what AMD is doing. What's more, for swing trading purposes, I do not recommend AMD precisely because it is going to report earnings in 1 hour. So it is going to report earnings, the volatility will increase. We never know to which direction AMD could explode or not, so I prefer to stay on the sidelines waiting for another opportunity. Now, but Nathan, what if AMD explodes tomorrow? Well, if AMD explodes tomorrow, all right, we are gonna look for other opportunity. Maybe if it does a pullback, maybe if we see a clearer bullish reaction, then we can buy it again. We did trade AMD a few times in the past together on the 5% project, but right now, I don't advise it. I just believe that waiting on the sidelines is the best for now, especially because it is going to report earnings. And always, guys, earnings are always a bet, okay? Sometimes you can make a lot, sometimes you can lose a lot. So in the end, it feels like you are always in a break-even, so it is simply not worth the stress, okay? So that's why I don't like holding stocks during earnings report. Now, if AMD breaks the 21-day EMA, if it breaks the previous resistance level, materializing what seems to be a double bottom chart pattern or maybe a triple bottom chart pattern, right? If we do trigger this pattern over here, then fantastic. AMD will finally reverse this persistent bearish sentiment that has been haunting us since October last year, all right? So we will finally reverse it. Then we will see for more buying opportunities. Right now, I don't see any meaningful signal. But Nathan, what if AMD collapses after earnings? If it does, then all right, any bottom signal near a support level could be our next buying opportunity. Either way, guys, either way, it is a wait, okay? We should wait over here for more confirmation, for a clearer risk-reward ratio, because we always work with good risk-reward ratio, all right? And then we'll see how to proceed. But so far, I see better opportunities elsewhere, all right? Regarding Palantir exploding 23% right now. That's fantastic after earnings. Guys, Palantir, as far as I'm aware, you may be wondering, Nathan, what if we see pullback on Palantir? What if we see Palantir collapsing again? My dear friend, any pullback to the $84 or maybe even to the 21-day EMA would be just another buying opportunity. Okay, so a pullback over here is not supposed to be scary at all. But Nathan, I have a position in Palantir. If I see pullback, Palantir could drop roughly 20% or maybe more, 23% until our next support level. Well, so far there is no top signal. Okay, I don't see any crystal clear top signal. If we lose today's low, closing below it tomorrow, then all right, maybe we're gonna see a dangerous situation. Maybe Palantir will trigger a sharper correction. But guys, we saw top signals like this before, right? We saw this one over here. Another shooting star candlestick pattern below the $84. We saw this one over here, quite similar to today's candle, right? Bearish reaction below the resistance. It was a short-lived pullback. We saw another signal over here, right? November 11, 2024. It failed in triggering this top signal. So this is why I'm telling you guys, we need to always wait for the pattern to get triggered first. Then we decide if it is a good sell or not, if the risk-reward ratio makes sense or not. As far as I know, right now, Palantir is stabilizing its price, going up more than 20%. Okay, fantastic movement. If we see a top signal, maybe it will be a sell again, but so far there is no technical confirmation yet. Therefore, Palantir looks just okay. Now, if we see any confirmation, let's see if Palantir will make a pullback to the $84 again. If it does, it will be just another great, fantastic buying opportunity, because this area made by the 84, made by the 21-day EMA is going to be the next major support level on Palantir. Only if we lose this support area, we are going to technically trigger a meaningful, sharper correction, possibly on the weekly chart, making a sharper correction long-term wise, maybe to the $60 again, maybe even lower. So far, so good. The situation is still under control. Palantir still looks phenomenal. Of course, I'm gonna keep you guys updated on this channel every single day. Therefore, if you are still watching this video for 22 minutes, almost 22 minutes, my dear friend, this channel is for you. I never ask you guys to subscribe, to click the like button in the first 5 or 7 minutes of our videos, because I know that most people don't have the focus, the attention span strong enough to maintain their brains in one single video about technical analysis for more than 20 minutes. If you are still here, my dear friend, you did like the content, you did like this video, so come on, subscribe to this channel and click the like button as well to support me, because here we are here every single day describing the most important inflection points in many stocks together. I will share many valuable information here, so subscribe, and again, click the like button, because every single like matters. All right, every single like is very important for this small and humble channel. All right, so support us over here. Thank you very much. Now, Broadcom, you guys love Broadcom, right? I know, but guys, we gotta break this this 21-day EMA in order to make a decent, meaningful bullish signal. All right, otherwise Broadcom will maintain its short-term bearish bias over here. Any top signal below the 21-day EMA could be catastrophic for it. Broadcom did trigger a fantastic buying opportunity for us over here, which I did share on our 5% project. On the 1 hour chart, we saw an ascending triangle chart pattern over here. We saw the breakout, a brief breakout, and then it did open, making a gap over here above the 21-day EMA. Now, so far, it is going up nicely, but we have yet to break this moving average on the daily chart. That's our main nemesis over here. Hardly we're going to lose money again on Broadcom, again, for the first time in Broadcom over here, but it is a delicate situation. We gotta break this moving average as soon as possible. Otherwise, it could easily correct again, maybe to our entry point, or maybe to retest the next support level around 196, which would trigger our stop loss over here. So we gotta pay attention to these key points so far, but for now, it is still looking good. It is under control, but it is annoying to see Broadcom below this moving average. We gotta break this moving average as soon as possible. Only then we can retest higher levels, maybe to close the gap around 242. So yeah, we gotta keep an eye on it. Micron is another stock that looks quite good over here. I do see another possibility of a bottom signal. I'm still studying a trading strategy on Micron over here, and I will share this strategy on our 5% project group, but so far we need to see the confirmation, the real confirmation of a bottom signal over here, because guys, we see a few technical evidence suggesting a bottom. Okay, we see a possible double bottom chart pattern. We see that Micron is reacting after closing the previous gap around $90. So if Micron is going to react, now would be the perfect time to do so. But two things: it is very important for the QQQ to maintain its bullish bias. Otherwise, Micron will also reject the idea of a bottom signal over here. Secondly, just like on Broadcom, Micron is still in bearish territory, is still below the 21-day EMA. So it would be a riskier trade to take, all right? Therefore, we always work with balance. That's why I always recommend many trades, trades on many stocks, including high beta stocks, low beta stocks, stocks with low correlation to the indices, stocks with more correlation to the indices. So we always work with balance. Okay, Micron is a high beta stock. It is still in bearish territory, so we gotta be careful over here. But it is a promising one. All right, it does look quite promising. I like how it is behaving right here, right now. But we need more technical evidence suggesting a bottom signal, especially because we are still in bearish territory. Of course, I'm gonna keep you guys updated every single day. So again, subscribe to this channel. If you wanna join our educational project, just take a look at our website. The link is in this video's description. Join the 5% project. We will be there for you, helping you developing the best strategies for the market. So take a look at our website. Thank you for your audience, my dear friends. Stay safe. See you guys tomorrow. Bye bye.